So let's look at Hammond Power. Again, this should be no stranger to our clients as it's been in coverage as a buy for a couple decades now. Hammond Power, symbol HP.S on the TSX or Toronto Stock Exchange, trades at about $109 now, $1.29 billion market cap, just under 1% dividend yield. What do? They have a history. It dates back over 100 years. They enable electrification through its broad range of dry type transformers, power quality products, and related magnetics. They offer standard and custom design products that are essential and ubiquitous in electrical distribution networks through an extensive range of end applications. The company has manufacturing plants in Canada, the US, Mexico. They just launched a new plant in Mexico, India, and they sell their products around the globe. Let's look at the stock price over the past 5 years. It's up over 1,100%. Tremendous growth here. And again, our history dates back to when this stock traded at the 60-cent level. So it's been a tremendous long-term winner for our clients. Let's look at what drove the stock price gains last week. Record sales in the quarter, 197 million, up 14.3%. Earnings from operations were up 85%, and EPS was up 77%. Additionally, there were strong gross margins in the quarter, 32.8%. Year to date, 32.3%. So Q2 gross margin was better than Q1. Adjusted EBITDA percentage is 16% of sales in the quarter. Year to date, 16.4%. So adjusted EBITDA as a percentage of sales was better in Q3. Year to date, adjusted EBITDA increased 16.7% after a weaker Q1. So Q2 highlights, more highlights here. They officially opened a new factory in Mexico and achieved record all-time shipments once again in the quarter. The U.S. market is experiencing its strongest growth through the distributor channel as Hammond continues to grow both the number of new distributors as well as sales with existing distributors. OEM manufacturing channel, which while higher year to date, decreased in the quarter. So that's of note there. The backlog, despite reaching record shipment levels, the company's backlog did increase sequentially from Q1 2024, about 1%. So let's look at the valuations after this quarter and a little bit move higher in the stock price. Trailing 12 months, 26.9. EV to EBITDA 13.6, and PE based on estimates for this year of just under 20. Given the 1,100% plus gains we have seen in the past 5 years, these numbers are not overly inflated, but one has to factor in that historically, in terms of revenue growth, the company is looking at rates of 10 to 12%. So conclusion here, just first some color. Over the past 20 months, Hammond has been adding equipment to its existing factories, coupling this with strong demand, and the company has seen consistently increasing shipping volumes. This cumulative added capacity produced, again, sales growth of 14% plus year over year in the last quarter. The bulk of the announced capital expenditures for Hammond Power this year will be spent during this year and completed in early 2025. Construction and equipment installations have been running smoothly, which enabled Hammond to open the Monterrey 3 facility in Mexico, its new facility, on time and on budget. Again, bookings were strong in the second quarter, and Hammond achieved its second highest month of new orders ever in April. New orders reverted to more normal levels, management reported in June, as standard products sales cooled in the U.S., offset by somewhat increasing sales activity at new and existing distributors. The company expects the standard product market to remain stable for the remainder of the year. However, management noted that they are still expecting to see strong activity in the custom equipment as project activity remains elevated. Now, in terms of the cooling in June, it appears to be the company's standard transformer products, which are used in commercial construction products and tend to be weighted towards general economic conditions. So the softening in construction due to higher rates is impacting part of the business, which should be expected. Okay, so Hammond Power has has gained over 19,000% since our original recommendation. Q2 results bested expectations. The stock, however, at the current price, trades at close to fair value in the near term. Clients will be updated on this stock this week. All right, and that'll end my brief update on Hammond.
So it's a good example of a company, because you were just talking about with Brett about how the ideal investment scenario is when you're buying a company that's a growth stock, but also where there's room for valuation expansion. So the stock price is appreciating based on obviously the earnings growth, but also the valuation relative to earnings. Now, I know with Hammond Power, I remember back when you originally recommended it, this company traded at a huge discount to the market. It was
Yeah,
like
you're
4 or
talking
5
about 4
times.
to 6 times earnings. And even
Hmm.
5 years ago, when we upgraded it 4 to 5 years ago, again, it was trading in that range again, anywhere from 5 to 8 times earnings. And you've seen tremendous EPS growth in the business, obviously revenue growth as well. And you've then seen the uptick in terms of the multiple that you're seeing, expansion in the multiple. And that's how you get a stock, over 5 years that can do 1,100%, and over the long term can do tens of thousands percent. And again, you've seen that with Hammond. Now that we would expect growth to continue to the end of the decade from this business, but it's not going to be in a straight line. You're going to see this type of jagged growth, as it is historically. They are, parts of the business. The standard transformers are subject to the commercial construction market. And at some point in this decade, and you're seeing it right now, you're going to see a pullback in construction. Companies that we follow in that sector have seen weaker quarters over the last 2 to 3 periods. So that's not a surprise to me. Honestly, it's surprising that Hammond is still doing tremendously well. The custom market is clearly working well for them right now, and their growth of distributors, total distributors, is helping keep sales higher. I mean, they had a record quarter there. So, and good, the margins continue to be there. They did have a price increase that they introduced in the last quarter. These are all good things. But if you are looking at, say, 10% growth, at 20 times forward, and that's if they hit a number that is a little more aggressive than we might look at for that quarter. But that's the consensus right now. It's probably just fairly valued right now. Again, if everybody wants electrification, the stock can trade to higher valuations in the near term. But we want to stick to a reasonable estimate based on what has historically been a growth rate and what management is really guiding towards now, being that normalized rate of growth. The balance sheet keeps getting better, so they could make an acquisition. That's the great thing about buying good companies with good balance sheets. You factor in the normal growth environment, and then they can go out and use the balance sheet where they're creating cash. They're using it to expand now with their own facilities. So organic growth, that's great, but they could make an acquisition. They have made small acquisitions that have helped growth in the past, and you may see that again.